Warning, it's a trap. The S&P is now setting up a double top. So what can we do if this is actually a trap? Because a double top pattern is not bullish. Well, let's look at what retail thinks we're going to do next week. This is an extreme reading, and retail is usually wrong. We have to also remember that most declines in a bear market happen after the Fed pivot, negative 35 to 50. So what did Jerome Powell tell us? He told us the time has come for the Fed to cut interest rates. Uh-oh, things don't usually turn out well when the Fed pivots or cuts rates. So that's scenario number one. I would also note that we've hit my target from the beginning of the year of 5,600. So, what could happen from here? Well, things could be pretty bleak if this is truly a double top, which basically just means that we're not going to form a new all-time high. We've hit our double top, and now it's time to slide. Well, that's scenario number one. That would be a bull trap. Scenario number two is that this could actually be a bear trap. It could be 1995. Now let's see the other side of the coin, because the technicals align and history tells us that when we're higher by more than 10% at the midpoint of the year, on average, we're higher by 82.6% for between 8 and 10% gains. Hey, that's not so bad. No. And when we have more than 20 record closes by the midpoint of the year, on average, we're higher by 80% for roughly 6 to 10% higher by the end of the year. So this is going to really matter, because at the end of this week, on the 30th, it's going to be the end of the week and the end of the month. Again, one more time, is this going to be a double top by the end of the week and the end of the month? Because we already know that right now on the weekly chart, we've hit our mathematical extension at 560 as well. That's the same number I just showed you here from my target at the beginning of the year, the 161 extension that I shared on December 30th. So to make this really simple, we have this weekly pattern that's now hit a target. And on the monthly, we don't yet know what's going to happen here. So I don't know if it's a bull trap or a bear trap. As of right now, if this is a double top, yeah, the bears are able to take control, but they're only getting number one right now. So if we're looking at the end of the month, how could they actually get a close below the previous candle low? I'll show you. What could happen? Well, this is where it gets interesting. We're going to get inflation numbers coming out on Friday. We're going to get a revision to GDP. And I'm going to show you one more thing in a minute, so please just stay tuned. The Fed's preferred inflation gauge is set to reinforce rate cuts, which means, again, potentially, we could be going downtown, which means a stock market crash. It's a matter of how much. So what's the preferred inflation gauge? Well, here we're looking at, on a 3-month basis, core PCE is now at 2.1%. 2.1 versus 2.3 last month. Hey, that's a pretty good reading. It's basically at 2. It's time to cut. So if it's 1995, it would mean that we're looking for a few more things. Let's see exactly what that would mean. We've been looking for growth outside of mega caps for quite some time, and now we're finally seeing it. As of August 10th, the S&P Bloomberg Intelligence is telling us that the S&P 500 X Mag 7, or taking out the Magnificent 7, is set for growth of 7.4% in the second quarter. All right, let's make this simpler, because people might be getting confused. Here's the outlook. As of right now, it is expected to be positive in the July to September period for the first time going back to 2021. What does that mean? It means we're finally seeing growth for the broader market. It could be 1995, but we're going to need to see more evidence to really confirm that. All right, now you've talked about the end of the month, and this is going to be very binary. So we got NVIDIA on the 28th, we got PCE on the 30th, then we close out weekly and monthly candles. I just told you how important those are. So on the 28th, NVIDIA is going to report earnings. Right now, we're looking for an 11% beat on earnings. And we've already talked about the reasons why I think these stocks could go up. If we look at the last month and go no group, the stocks that have done not great in the Magnificent 7 are Microsoft, Amazon, Google. Ironically, the company's spending on AI. So if they're spending on AI, who's going to benefit? Oh, that's right. It would be our friend NVIDIA. So I expect they're going to give us forward guidance that's positive, because these companies are spending and sacrificing profit. And that's going to be on the 28th. Then we round out the month on the 30th with that PCE reading. All right. So now we've talked about the potential for a bear move. And again, I know the video has a big move lower. I just knew you were going to click on it. So we're going to talk about both scenarios at the very end of the show. But I'm going to ask you for a huge favor first. If you could please consider smashing that thumbs up and subscribing to the channel, I would greatly, greatly appreciate that. All right, so now you've told us that if it's the bearish scenario, we got a very simple recipe we're looking for here. No new all-time high. We filled our upper gap. We reject on the weekly on a Fibonacci number, which was a target. And then on the monthly chart, we're just going to start fading from now. That's the scenario. This would also be a double top here on the weekly. Again, a sell signal. So now let's pick up the story for the bulls, because this is honestly, again, you probably know if you're following this channel, it's my base case. And the reason why I keep talking about 1995 is because people just don't seem to understand what happened in 1995. There was a technical revolution. It was called the internet. So now we have to really ask ourselves whether this AI thing is really something special. After we have NVIDIA report earnings, if it's bullish and inflation comes down to 2.1 on Friday, like I just showed you, well, what could happen into September for the bull party to really continue? Because I'm expecting us to go higher by a lot. I'm talking 220% going back to the 1990s after we get to number 4, which is making new all-time high. And we've already started that. So how can we go incredibly higher? Market widens out. We don't get an AI flop. And the outlook is strong. Okay, make it really simple for me here. Let's do it. So Apple's going to announce on September 10th, they're going to be debuting new iPhones, AirPods, and watches. These are going to be available in stores starting on September 20th. These are likely going to be AI devices. And Apple's a really big deal, in case you didn't know it. Apple is in a position to create itself as a consumer's Gen AI base camp. Do I agree with that? Well, it doesn't really matter. Of choice. Just as it has done for digital content with the iPod and social media with the iPhone. So if anybody is going to really make an indent into AI, I think it's going to be Apple. So what else could they be doing? They're already going to announce new iPhones. That's probably going to be AI enabled or enhanced. They also got Apple Intelligence or AI. And then they got AirPods and watches. But what else? Well, here's where it gets interesting. Apple explores robotics in search for life beyond the iPhone. They've put a pause on their cart, and look at this. Apple wants to build these things. Apple makes great hardware. Apple makes great software. Are they going to announce this on the 10th with that one more thing? That would be quite interesting. I think so. This is also really interesting because right now there is a World Robotics Conference happening in Beijing, and this is what they just revealed. More human-like robotic humanoids that are, again, giving human gestures and look much more lifelike. So if China's going into this, well, wouldn't it make sense for the Western countries to also try to compete? Absolutely. It also looks like there's a lot of demand. So if it's 1995, the bears, again, conveniently ignore this part here where there is a rate cut. Every arrow here, they're pointing to the rate cuts. Well, here, there's a rate cut. And what happens? The market goes higher by 220%. That's how it could be a bear trap. So that's what Jerome might have done on Friday, taking a victory lap and saying, suck it, bears. You guys are right most of the time, but this time I gotcha. And this is where, if we look at the heat map and go to groups, let's look and see where we've been here today. There's our good old friend, Mr. Green. Yes, everything is basically higher. And I just told you that we're now seeing a widening out. Last part. Major central banks are now aligned as Powell sees Fed cuts ahead. What does that mean? Canada, the Bank of England, and the US are now aligned. Are these the only important countries? No, but they were at Jackson Hole for a photo op. There you go. So rounding this all out, what has actually made new all-time highs? Because I told you I would leave you with some action here. RSP, new all-time highs. Look at Canada, XIU. This is the S&P 60. New all-time highs. So what I would be looking for is for more stocks to join the club. If we look here to RSP, which is equal weight S&P 500, what do we have? High, higher, highest, new all-time high. So this is not a double top. And yes, I know that's what I put in the title of today's video. Well, I also thought this could be a double top back here, where it looked a lot more probable, but now we have a bullish engulfing monthly candle. What's a bullish engulfing monthly candle? It has the word bullish in it. We go lower to start the month off. We rally back up and actually close above the previous resistance. That's what happened over here, which means that the bears took temporary control because they printed a monthly lower low, and the bears said, nope, we're rallying it up, and even higher than the previous candle. So this is extremely bullish. Let's look at XIU. Not that Canada really matters, frankly, but we also have a bullish engulfing monthly candle here over that previous all-time high. So as we're focusing only on the S&P, or if we're only focusing on the S&P, well, here we don't quite have that. I really think NVIDIA and whatever Apple says next month after the Fed is really going to matter. Let's look at a few more charts here because I think this is what's really important here. The NASDAQ is not the current leader. Why? Well, we can see that here, right? This still looks like it could be a head and shoulders. There's your head, there's your shoulder, there's your shoulder. So if the S&P is going to tank, it's probably going to be because this pattern does not play out. We're now back inside the range of the previous candle, or back above 454, but below 504. And the S&P, if it can hold by closing at or near the high of this candle, it should get follow through. Again, keyword being should. I just told you what the key catalysts are for this week. It's Wednesday and Friday. And honestly, I don't know what's going to happen or what the reaction will be, but you probably guessed it by now. I'm leaning on being bullish. So finally, if we look here to SMH, similar pattern, right? There's your head, there's a potential shoulder, there's a potential shoulder. So if chips lead tech and tech lead SPY, well, chips are already starting a slide. They're only up by 0.5% on the month. If we look to QQQ, well, they're up by 2%, but again, still at a resistance area here. They're not looking like the Dow. They're not looking like banks, which they're much closer to all-time highs. So to round this out and make it really simple, let's look at 2 or 3 more quick charts just to make the story very clear. Now let's go back here to our weekly chart and look at VIX. Let's actually go to the monthly. Why? Well, remember, we had this big bout of volatility, like in 2008, global financial crisis, and like in 2020, global lockdowns. But here's the really important part. If this is not a global meltdown or interest rate error, what should happen? Well, let's look on a line chart because this cares about a closing price. You don't even see 2024 here. Why? Because this is a candle close. Back in 2008, it was a multi-month bout of volatility. 1, 2, 3 months. Over here, 1, 2. That is why we get a close over 50. And this time we didn't, which means that it appears like it was a one and done. If we go back here to VIX, let me just pull it back up. This is really important for my thesis. Again, keyword being thesis. It's not a 30-day money-back guarantee. So if 2024 is truly different, like it would be if it actually is 1995, this is only, so we have 1, 2, 3, 4, 5, 6 times. This would be 1 in 6 times it actually worked. Just like here, this would actually be 1 in 3 times it actually worked. So because we basically shook the tree, and I think we set a massive bear trap, not a bull trap, this is why the market can keep going higher. There's more than $6 trillion sitting on the sidelines waiting for a place to put their money now. Why? Because Jerome Powell just lowered interest rates. So that money's going to want to find a reach for yield or find things to buy. All right, so with that said, if you have any questions or comments, please drop me a comment. If not, watch the video on the left or subscribe on the right. And I'll see you guys at 9:15 a.m. on Monday. Thanks so much.